Hello and welcome to Eating Markets, Crypto TV, presented by CoinSwitch Kuber. I'm Meloni Bhatt. Our focus today, tax on crypto in India. And there have been a range of reactions to it. Some are happy, saying that it confers legitimacy to crypto. And then there are those who say that the high tax rate compared to taxation on other assets is unfair. Now, if you want to know exactly what are the taxes you pay, from when you will pay them, what happens if you mine crypto? What tax will you pay then? How does it impact peer-to-peer transactions? Now, to answer these and other questions, I have with me Amit Singhania. He's the partner at Shardul Amarchand Mangaldas and Company. Amit works on matters pertaining to cross-border investments and financial services sector. He has extensive experience in mergers and acquisitions and other transaction advisory, strategizing tax litigation matters, and policy advocacy matters, among other things. Amit, thanks very much for your time today.
Thank you. Thanks for giving me the opportunity. Thank you.
Amit, crypto evangelists say that taxation will legitimize cryptocurrency adoption in India and benefit the system. But government's decision to tax it at 30%, do you think it's justified? Is it on the higher side? So two questions here. First, will it legitimize? And what do you think about the rate of taxation?
Okay. First of all, just because there is a tax rate and there is a tax regime prescribed under the tax laws, that is not going to legitimize the cryptocurrency per se. As we all aware that the bill has not been introduced in the parliament in the budgetary session, which may give some kind of a color regarding the legitimacy of the cryptocurrency per se. Just because a tax rate has been prescribed, regime has been prescribed, has nothing to do with the legitimacy. On the aspect of the 30% tax rate, yes, that this is on the higher side when you compare the corporate tax rate of 25%. And for the taxation of individuals, we have a slab. Prescribing a flat 30% tax rate without any deduction set off is on the higher side. This is a punitive regime which has been introduced. Definitely, this is going to affect the crypto trading in the long run.
Okay, and we'll speak about that later. When you think about why the government has taxed it at 30%, what do you deduce of the government's thinking on it?
Look, 30% now, if you see into the tax statute book, 30% is the tax rate which was prevailing earlier. So as I said, the corporate tax rate is also 25%. Individual follow the slab. Yes, the highest slab of the individuals can go up to 30%. I think the government is taking the clue from the individual tax rate, the highest tax rate, and they do not. So in the policy regime, crypto is something which does not figure out in terms of their policy regime. They don't want to extend any kind of a benefit or concession to the cryptocurrency. I think that's the thought process of giving the highest tax rate, the highest prevailing tax rate to the crypto regime.
Amit, when will this tax rate be applicable for those people who are holding or who deal with crypto?
Look, this tax rate is prospective. So if you are going to undertake a transaction post 1st April 2022, so this particular tax rate of 30% will only be applicable for the income earning during the financial year 22-23. That means from 1st April 2022 onwards, but not prior to that.
Okay, so it's not retrospective. It
not
doesn't apply. Okay.
No.
Can you help us understand, how the tax moves? So I'm going to try and explain to you. For instance, if I have a bank account, I transfer money from the bank account, maybe to a crypto wallet, and then from that crypto wallet, maybe I invest in cryptocurrency. I invest in cryptocurrency. There are gains which I pass it on to the wallet, and then from wallet back, it goes into my bank account. Now, in this entire chain, where will I get taxed and what will be the percent of tax?
Okay, so when one person is transferring the money from bank account to the crypto wallet, so that means the legal tender of money is getting transferred from the bank account to the crypto wallet. There is no absolutely tax on this particular transaction of a just mere transferring of the money from bank account to the crypto wallet, and obviously there is no income generation also. It's just a transfer from one pocket to another pocket. However, when you are buying a cryptocurrency by utilizing your wallet money at that particular point in time, there is a 1% TDS which is required to be deducted on the purchase transaction. First of all, suppose if I'm buying a cryptocurrency from my digital wallet, I need to honor this 1% TDS obligation. Now, how I am going to honor this TDS obligation, that I think we are going to deal with it in a little later. But 1% TDS, the 1% withholding taxes will be required to be deducted and paid to the exchequer when I have already bought and stored into my digital wallet. Again, then there will be no taxation. When I'm going to sell this, the differential, that means the difference on the sale consideration, that means the amount that I'm realizing on the sale of this particular cryptocurrency, less the cost of acquisition, will be offered to tax at the rate of 30%. And I need to report this particular transaction in my income tax return. I'm sure the income tax return forms and the utility will be updated to accommodate these kind of transactions. And further details may also be asked pertaining to the crypto trading.
Supposing after I buy the crypto, I store it in my wallet. Okay, I do not transfer it to the bank account. What happens?
Nothing.
So I can do that. What happens if, for instance, if I put it into the wallet and I convert it into a stable coin? What happens?
So that means what you are saying, you convert from one cryptocurrency to another cryptocurrency. That will tantamount to trading.
Within the wallet also?
Within the wallet also, if you are changing the form of cryptocurrency from one to another, because the value could also change. You have bought this particular cryptocurrency at one particular rate. When you are transferring, the rate may go up, may go down. So depending upon the differential, this will be a taxable transaction.
Okay. I read somewhere an opinion where they said that cryptocurrency gains will have the same tax slab as gains from gambling or winnings from gambling. Is that correct?
Even so, basically, I think the people are trying to compare the tax regime and the tax rate prescribed for cryptocurrency with the tax rate prescribed for the gambling and the betting. Yes, partially it is correct, but if you see the gambling and the betting, at least the loss arising from the gambling and betting is carry forward. So there is no restriction upon the carry forward of the loss. So this is a more punitive regime than the gambling and betting, because there is no loss which can be carried forward in this particular regime. So to an extent, yes, it can be comparable.
Okay. Worldwide, wherever tax on crypto is applicable, is this the rate of taxation? Do we see at all?
Look, this is a new subject matter for the world at large. There are few countries which have already levied the tax on the trading of the cryptocurrency. But there are not too many countries. Only the matured economy has come up with the tax legislation taxing the crypto transaction worldwide. So there is no benchmark of the tax rate, but worldwide countries has adopted the highest tax rate prevailing in their local jurisdiction to tax the crypto transaction. Look, crypto has not found favors with the exchequers and the government because it directly challenges their legal tender of money. So that's why countries at large have tried to adopt the highest tax regime applicable in their domestic jurisdiction.
Do you see people trying to find ways to circumvent this tax?
Look, the way the law has been worded, there is no room for the circumvention because, first of all, as of now, the law stands. The law itself is not very clear how this is going to be implemented. There are several issues which I'm sure that we are going to talk about.
No, if you can go into it, Amit, what are the issues?
Okay. So suppose, first of all, my intraday transactions, my intraday profit and loss. Suppose if I am
a trader.
Suppose if I am a trader and I am earning income from on day one from the trading of the cryptocurrency, and I'm earning losses from in day two, and these day one and day two both fall within the financial year, whether I am allowed to set off or I need to see only my earning and offer to tax at the rate of 30% only on my income but not the losses. So the way that the provision is worded, it appears that intraday trade or whatever trade that you are consuming within the financial year are eligible for the set off. The reason why I'm saying that this is appearing from the wording, basis the clarification that may be provided in future or basis the return form, this particular interpretation can undergo a change also, because the intention which they have highlighted that they don't want to set off the losses. But losses to what extent? Only the losses incurred, the net losses incurred in a financial year, or within the financial year also they are going to see the losses.
Right, because the finance minister, I think, has said that no deduction in respect of any
Yes,
expenditure or
yes,
allowance shall be allowed while computing such income except cost of acquisition.
yes,
Further, loss
yes,
from transfer of digital assets cannot be set off
yes.
against any other income.
So it is not the deduction. So I will come to the deduction portion a little later, but just the loss incurred during the financial year from multiple transactions, whether I
Right.
will be eligible to set off the losses, because ultimately I need to compute the income at the end of the financial year. I am required to pay tax basis my income at the end of the financial year.
Yeah, understood. So this will of course apply to if I'm a trader or if I'm an individual investor as well, right?
Yeah. Whether if you are doing a trading in a company, this will be applicable. If you are an individual investor and you are undertaking the trading, this will be applicable.
You clarified at the beginning that the tax will apply from the year 22-23, right? So
Yes, financial year
just
22-23.
financial, yeah. So just want to clarify one thing here. Losses from the past year will not be carried forward then.
So the way that the wordings are there, losses from the past year will not be carried forward, because this particular regime is going to be only applicable from 1st April 2022. So it
22.
appeared that losses arising up to financial year 21-22 will not be carried forward, will not be allowed to be set off against this. It appears
Understood.
so, but again, the clarification is required.
Right. Okay. For traders, those who trade in crypto, will there be any other kinds of taxation that they should be prepared for?
No, for trader, 30% is going to be the final tax, plus surcharge, plus cesses, whatever applicable to you. But my major worry, rather, rather a significant portion of my worry from the crypto regime arises from the TDS obligation. How the traders are going to oblige with the TDS obligation. Look, traders are trading into the cryptocurrency.
Right.
Okay, let me just give you a very simpler example. For example, you are selling chocolates to me, and I am buying chocolates from you, not by making a payment into the INR, but by making a payment into cryptocurrency. Assuming you are the seller of the chocolate, I am the purchaser of the chocolate, and I am making the payment through cryptocurrency. So, since I am paying you the cryptocurrency, that means technically you are buying cryptocurrency from me. If you are buying a cryptocurrency from me, you will be required to pay 1% TDS, which is
Yes.
not your tax. This is my tax.
Right.
So suppose if you are selling me the chocolate at $100, I am only obligated to pay you $100. But since
Correct.
you are buying a cryptocurrency, you need to shell out $1, 1% on
More.
this $100 from your pocket.
Yeah.
So how
Yeah.
will you comply? Either you increase the price of the chocolate to $101, and then you sell $101 to me, and I will pay you cryptocurrency equivalent to $101, so that you can monetize this $1 later on, and thereafter pay the taxes to the exchequer.
Right.
The
Right.
same goes with the trading into the cryptocurrency. So now you substitute chocolate with another cryptocurrency, and this will have a ripple effect. This will have a multiple effect in the whole cycle, because a trader trades multiple times during the day.
And do you expect clarity on this to come through?
Look, the TDS provision provides ample room for the central government through CBDT to prescribe guidance through rules or through the circular to remove any to remove any difficulty while making practical implementation of this particular regime. So yes, we do expect some circular, some rules will be prescribed to clarify the air how this particular TDS regime will be implemented, because otherwise it will have the cost of increasing the goods into the system.
Yeah, constantly increasing the cost
Yes,
of.
constantly increasing the cost.
Amit, this is also about peer-to-peer transactions, which are P2P transactions where users buy or sell crypto among themselves. Now, right now, there is no KYC. The participants are sealed from traditional laws. Their transactions are invisible. How do you see that being dealt with through this tax law?
Look, the law is applicable to them as well, but I think the problem that you are highlighting is basically the enforcement, because there is no trail.
Correct.
So how the revenue authorities are going to enforce, because how will they get to know about the
Exactly.
happening of these transactions? So the enforcement is a different ball game altogether. How the tax authorities are going to monitor, how they are going to get the information regarding this particular transaction, because there is no trail, there is no audit trail which is being left, there is no footprint which is being left of this transaction. So I don't think that the revenue authorities have gone that far, because this is just their first attempt to tax the crypto regime, or rather the crypto industry at large. So I think they will make further attempts to monitor these transactions. They will further prescribe the compliance burden more and more upon the on the B2B transaction. They will fasten the liability upon the recipient and the payer into the B2B transaction, so that there is some kind of a footprint is being left, or it is being forced to leave, or forced to file some kind of a tax return, some kind of an information trail to the revenue authorities. But as of now, they have not envisaged this. But I think in the future budget, or maybe even before the budget also, they may come out with something.
Linked to this is, also the same thing. I mean, because identities of taxpayers who transact with crypto, they remain anonymous, because the crypto address is a string of alphanumeric characters, and it does not give the person's real identity. So it gives the tax evaders this cloak of invisibility, and
No, I don't think. Look, rather, fortunately, I had the occasion of chairing one session yesterday, where we interacted with the CBDT officials, and we also highlighted this particular aspect that, look, identity of the buyer and seller is not known. So even if I want to comply with the TDS provision, how will I comply? I don't know the identity of the seller.
yes,
So I think a similar comparable situation is already there into the system, which is the trading of the listed securities. When you go on the BSE or NSE's website and try to trade upon the securities, you don't know to whom with you are dealing with, to whom you are selling the security. The fortunate part is that there is no withholding provision, there is no TDS provision on the sale and purchase of the listed securities. But I think the liability can be fastened upon the exchange to make sure this compliance happens. So maybe the way to implement this particular TDS provision would be to fasten upon the exchange. They need to ensure that TDS upon every transaction is being collected by the exchange and paid by the exchange, and that will deem to be the sufficient compliance on behalf of the traders.
so that is the responsibility that exchanges
Yes,
could
may have to
possibly
discharge.
have to undertake
Yes,
now.
yes, yes,
How
yes.
how how difficult does that make life for them?
So first of all, that I think that may require changes into their system, how they function, because as of now, I don't assume that they have any mechanism to even collect anything over and above the trading price. So they need to change the system and try to put 1% on every transaction, 1% extra. Just how they are earning their commission, they must be deducting some kind of percentage from the trading price. So they need to deduct 1% more.
So the whole point is that, while the government is taxing crypto, there is, because we are in a regulatory black hole as far as crypto is concerned, there is still no investor protection. So the government wants to tax crypto, but this is without investor protection coming into play. There is little that shields investors from, say, a rug pull, from a Ponzi scheme, or from a scam.
Look, the way that this cryptocurrency has been introduced, I think it is also giving the flavor that the government doesn't want you to trade. The government is discouraging the trade to indulge into the trading of the cryptocurrency. Because of the reason this is not regulated, we are not very sure whether we are going to regulate or we are going to ban. There is no footprint. There is so much of Ponzi scheme that can be created out of this particular technology through the cryptocurrency. So I think this is one of the way, or this is one of the mechanisms to make life difficult for the traders. They are discouraging, and that's why the question of the investor protection also does not arise.
I want to come back to the earlier point that you made. Crypto intermediaries like exchanges, wallet providers, miners, administrators, they're all unregulated, right? And collecting information from them for the tax authorities is going to be very, very difficult. How will tax authorities overcome this challenge? Where there are hardly any tools to verify crypto transactions which get repeated, or now do you see banks, warming up to the crypto ecosystem?
So I think, as I said, that the government has not thought about the regulatory mechanism, how they are going to regulate these crypto provisions, which has been just newly introduced. But as I said, that I'm sure that they are going to prescribe certain returns to be filed by these exchanges. They are going to make certain registration mandatory for the exchanges if they want to indulge into this particular technology, if they want to indulge to provide a platform for the cryptocurrency, because otherwise it is not possible to even collect these kind of taxes from this particular regime. But I'm sure that a regulatory mechanism within the tax framework is going to be get prescribed in order to regulate these provisions.
So are you saying that the tax department is perhaps not 100% geared to meet up with all of these new challenges?
Look, I think the idea in this particular budget is to provide a tax framework, regulatory framework, the tax framework for the purpose of taxation of the cryptocurrency. Over the period of time, they are going to come up how they are going to implement it. They are going to prescribe the necessary infrastructure to implement these provisions. So I will not say they are not geared up. I think it's not a right time.
So it's a learning process. Yeah, it's a learning process for them.
It is a learning process, but the scope of the union budget and the finance bill proposal is just to provide a legislative framework, which they have provided, and they have still ample time to provide the necessary infrastructure in order to implement this.
In the long term, what do you see the impact of this transaction in the entire ecosystem in India, the crypto ecosystem?
Look, in the long term, as I said, 30% is a punitive rate. This is definitely on the higher side, and no deduction, no set off. TDS has already been introduced, and that too at the rate of 1%. And that is also something which is quite discouraging, because sometimes when the traders trade, his profit margin is simply less than 1% in a one particular transaction, but he will be required to shell out 1% of the trade value, which is much more than his profit margin. This is another mechanism to discourage the trading. So in the long run, in case this particular tax regime doesn't get rationalized, I think this is going to be a roadblock for the trader if they want to indulge into a trading, and if they want to indulge into a trading at the same time comply with the tax laws. In the long run, writing on the wall is quite clear from the government side. They don't want this particular trading to flourish.
Right. But in the last 2 days, we've seen, and all of these exchanges are reporting that more people have signed up. They're saying there are 20-30% people who've signed up, because the people are taking this as a sign from the government that over a period, cryptocurrencies will be sort of captured within the system, and they'll become a part of the finance system. Do you see that happening? So that's why these people are bullish.
Yeah, look, I think first of all, these are the initial stages for the people even to grasp the niceties of the tax regime. People have not understood it correctly. Secondly, for a layman, what a layman considered out of the tax regime or any kind of a tax system, if I'm earning profit, then only I will be sharing my pie. So for a layman, they think that if I'm earning $1, okay, I am ready to shell out 30 cents out of it. What's the big deal? But whether I'm earning $1 is basically the commercial decision, is basically the trading price, is basically the future of the cryptocurrency. So they are not getting demotivated as of now because of the tax regime. Over a period of time, they are going to feel the need that this tax regime need to be rationalized for them to continue in this particular business. As of now, they are just getting attracted with the future potential, or with the future potential of earning more and more out of this.
Right, Amit, thank you so very much for joining us today, and for shedding light on all of these matters. And as you say, it's a steep learning curve also for the tax authorities, and also for those people who invest in cryptocurrencies. Thank you very much for joining us.
Thank you. Thanks for providing an opportunity. Thank you.